The market and bring in Leanne Jones from Bell Direct. Leanne, good to see you too. What did you make of the market performance today?
Bridie, look, a little bit disappointing, obviously closing in negative territory, continuing the sell-off that we've seen all week. So we're actually now down about 2% for the week, obviously coming into the last trading session tomorrow. We obviously followed those negative leads coming from overseas markets this morning in the wake of those falling oil prices. But we did actually see a bit of a bounce in the market, obviously at about 11:30 when we did get that employment data coming through. We obviously saw that surprise lift in that employment number coming in at 42,700 new jobs in November, and that was obviously above that consensus number of 15,000. So it was quite a good beat on expectations there. Obviously we saw that unemployment figure rising to 6.3%, the highest now that we've seen in about 12 years or so, but that was basically in line with consensus. So although the numbers actually didn't look great, I think there is now a bit of an expectation that we might start to see some speculation about further interest rate cuts. So potentially why we did see a bit of a bounce in the market at that point. Obviously, as you mentioned, that energy sector, not surprisingly, was the worst performer today. We did see over in the US a big sell-off in a lot of those energy stocks. But of course, on the other end of the spectrum, still continuing to see Qantas performing strongly. It was up another 2.1% today. And of course, that materials sector was again under pressure. Commodities obviously overnight all weaker following the weakness in that oil price. We did see some of those gold stocks performing strongly though. But of course that consumer discretionary sector, another one that came under pressure following that weak consumer confidence read that came through yesterday. So as I mentioned, really continuing that sell-off, a little bit disappointing, but we did see that bounce earlier in the day, and I suppose, yeah, not surprising that we did see that sell-off in the energy sector.
Make of it. I mean, these further updates we've been getting from some of these energy producers as the oil price just continues falling.
Bridie, look, I certainly think it's an indication of the challenging environment out there, given the falls in those oil prices. Obviously seeing these updates continuing to flow, obviously really putting significant pressure on a lot of these companies. As you say, Santos today has actually hit another fresh 10-year low, so continuing to come under pressure. Obviously there's been a number of factors really contributing to that, in addition to the falling oil prices. You mentioned earlier the S&P obviously downgrading its credit rating. Recently it postponed that capital raising, which we thought potentially would have actually helped them out in terms of managing their credit rating. And of course they also narrowed their 2014 production guidance. And of course, in addition to all of this, further news today saying that they are going to be slashing that spending and obviously looking at potential further asset sales. So all of this really contributing to the falls that we have been seeing, obviously adding pressure. I think coming into 2015 we are expecting that their cash flows will be negative, and that's obviously going to put pressure on their dividend policy. So I think the outlook certainly does look very cautious, very shaky. Obviously looking at Origin as well, saying that those low oil prices are going to affect their profits this year. And of course yesterday we actually did hear out from a smaller oil company, Cenex Energy, saying that they were looking at potentially slashing some of their spending as a result of the oil price environment as well. So really a clear sign that these low oil prices are continuing to impact a lot of these companies, in particular a lot of those smaller oil companies. Obviously the oil price really is driving the direction and the volatility on the market that we are seeing, and I think we can continue to expect to continue seeing this before we actually do start to see a bit of a stabilisation in that oil price. So I think given some of these updates, potentially you might actually see some more to come.
And just on that though, at the other end of the scale, I mean, we hear from Caltex there a strong profit guidance upgrade coming through. What do you think of this stock in light of the environment that we're in?
It was certainly quite an interesting one, certainly bucking the trend today. It actually was the only stock in that energy sector to close in positive territory today following this upgrade, or this update I should say. Certainly looking quite positive in terms of those replacement cost profits, looking to come in up to 40% higher than the previous year. Obviously their refining and supply earnings also looking to be quite strong, seeing a turnaround from a previous loss to now a profit, and that's actually ahead of our forecast. costs, and also their net debt expected to decrease by about 12.5%. So I think all of that certainly looking very positive. This stock, since obviously it's closed that Kurnell refinery, it has actually been through a bit of a re-rating. So I think there's been a bit of a change from being more of an energy company to now more of an infrastructure company. And as a result, that's actually driven that share price higher in comparison to some of those other stocks where we've been seeing significant falls. If we look at year to date, we've actually seen that Caltex share price increasing about 52%. So certainly a sign that it has now transitioned away from being more of an energy company. However, looking at the long-term outlook, obviously Australia's refinery sector, I think, is expected to continue remaining pretty challenging given some of the new larger facilities coming online from the likes of, say, India, which are obviously flooding the market with a lot of cheap fuel. So I think the company expecting that potentially those refiner margins are not likely to continue, and I think that the outlook in that area potentially looks a little bit challenging, but certainly have been seeing it bucking the trend, and quite a positive update today.
All right, Leanne, appreciate that. We've got to leave it there. Thank you so much.
Thanks, Bridie.
Leanne Jones there from Bell.